Hi, this is Ron Mueller, and welcome to this webinar. Though for those of you who don't know me, I've been teaching home business tax law for about 10 years now, and over that period of time, I've gotten to where I guess I've been called one of the top two or three people in the country who understand this narrow area of tax law. It didn't always used to be that way. I learned this myself starting about 15 years ago when I was ready to go into a home-based business of my own. I was growing weary of my long commutes in Washington D.C. and wondered one day on the way home from work while I'm sitting in traffic, deadlock traffic, what would it be like? What like if I could just work from home and not have this insane commute? So I started wondering how much it would cost me, how much I'd have to make in my own home-based business to be equivalent to my corporate salary, so I could quit my job and work full-time from home. And of course, I knew I'd save money on gas and my car insurance, and I wouldn't be buying neckties anymore. I knew I'd save a lot of money in a lot of ways, but I thought the biggest was going to be the tax savings. So that night on the way home, I stopped by a bookstore, actually two bookstores, major bookstores at that time, that with one question of the information desk, and that's where do I find what book would help me understand the tax deductions available to home-based business owners, so that I could quantify what they were going to be worth. And neither of those bookstores could find a book on that topic. They didn't have anything in their store. Even online, they couldn't find anything in their resources. So I went home and I Googled it, and I did whatever I could do to try to find that information. I couldn't find it. So then I went to the Library of Congress, which is in Washington, D.C., across the street from the Supreme Court. It was available to the public at that time, and I submitted the question there, and they came back and said, we don't have anything on that topic. So I'm starting to wonder now, is it real? I've been hearing about these tax breaks for home business owners and small business owners all my life. If it's real, then there ought to be something on it in writing. So part of my background is I've been an investigative reporter, so I started looking for the information for myself. I started finding sources and letting one source lead to another source. And eventually, every time I thought I had found something that looked legitimate, I'd trace it back to the original source, which usually was either congressional law, a tax court ruling, or a section of the tax code. So that's how I kind of pieced together this understanding of home business tax law. And then I spent another 6 months then trying to translate all that into English. And that's the book that you see, the title of it you see on your screen, Home Business Tax Savings Made Easy. That book has been reviewed by the IRS, and they didn't ask for any changes. So what that means to me is I've accurately understood the tax laws for home business owners, and that I've translated accurately into plain English. So that's a little background on me. So about 10 years ago, I started teaching this information, and now it's what I do full-time, is research, writing, teaching, helping folks like you all understand the big tax breaks available to us with a home-based business. So without further ado, let me go on to telling me that I should be closing any unnecessary programs because it may be interfering with the quality. Okay, let me see if I got any here I can close. I think I don't. Okay, I'm good. Okay, let's start. If taxes are keeping your pockets empty, we're going to do something about that right now. That's kind of going to be the theme of this morning's webcast. So let me ask first how well you're doing financially. You know, most of us, I guess we'd have to say, we're pretty good. We're making pretty good money in most cases, but we always seem to be broke. Do you ever have that feeling? And you find that most of the time you have more months left at the end of the money? Well, why is that? Let's look at the cause of that. And I think intuitively we know one of the biggest causes, and that's that taxes have a lot to do with it, right? Because we know that we're spending a ton of money in taxes. How much? Well, it's the biggest expense of all. Think about the biggest expenses you've got every month. It's probably going to be these things: your housing payment, your health care expenses, your food, and your transportation. Those tend to be the biggest four for most people. If you have a household budget and you prioritize that budget or list it by in terms of the most expensive to the least expensive, these would probably be in the top four. But you know what? It's true that those are big costs, but taxes cost you more than all those combined. If you add together the money you're spending for housing and your health care and your food and your transportation, all that, lump it all together, it still is a smaller number than the amount of money you're paying in taxes. In fact, most people aren't even aware of how much they pay in taxes, because when you get your pay stub at work, if you have a W-2 job and you get a paycheck once or once a week, once a month, twice a month, and there's usually a stub attached to that that shows the breakdown of how much was withheld for taxes. Most of us don't even look at that breakdown because it's disgusting. There'd be a heart attack if we really understood that. In fact, if the system were to change, and instead of withholding money from our payroll for taxes, they gave us all the money we earned, and then each month we had to write a check for our taxes, and we realized that that check is going to be bigger than the ones for housing, healthcare, food, and transportation combined, there'd be a tax revolt in this country. The only thing that keeps the revolt from happening is people are numb to the idea that they're paying a lot in taxes because we're not confronted with it every month like we are a house payment. But there's some good news. And the good news is that you can do something about how much you pay in taxes. I'm not going to tell you to do anything about paying taxes. That has been that's been argued all the way up through the Supreme Court, and it's been shown the Supreme Court has decided that yes, taxes are legal and all that stuff. So we can't get out of it. But we can reduce the amount of money we pay. Here's why. The biggest of all the deductions in America, who do they go to? Us, small home-based business owners. It goes to direct salespeople, network marketing people, consultants, freelancers, people who are self-employed either full-time or on a part-time basis. This is the category of taxpayer in America that gets more tax deductions than any other category, bar none. So we are in the best place we could possibly be in order to be able to manage how much we pay in taxes. Why would Congress pass special tax rates for this category, we have to ask? Congress has passed a number of different tax deductions, significant ones, for us. Why would we be in this tax advantaged category? Well, first of all, it's good for the economy. Small business is the backbone of the American economy. Small and home-based business is what it's the heartbeat of the American economy. It's what grows our economy. In fact, big business put our country into a recession, and it's small business that brought our country out of a recession. So Congress knows the power of small business, and so it makes sense for the economy to try to stimulate the growth of home businesses. By stimulate the growth, I mean encourage more taxpayers to start a home business, and the ones who have one, encourage them to continue running them and to expand them. It's also good for the taxpayer. It's a good backup plan for you. It's a safety net. If you go to work next week and find out you don't have a job because your company got downsized or right-sized or cap-sized, whatever it got, what you got was unemployed. If you find that out, then Congress said instead of going home to look up the address of the unemployment office, what if they could go home and ramp up their part-time business to full-time? It's better for the taxpayer, better for the stability of our economy. So those are a couple basic reasons why Congress passed special tax deductions just for home business owners. Congress asked, how do we encourage more taxpayers to run a part-time home-based business? So that's the whole purpose of this exercise, right? You have more taxpayers to run a home-based business. Well, the answer to that was financial incentives. In order to get anyone to do something they're not currently doing, there has to be some kind of incentive. It doesn't have to be financial, but there has to be some kind of incentive. Why do you get out of bed in the morning? It's probably for one of a few reasons. Maybe you're stiff and you want to get up and limber up. It may be because you're fully rested, you want to get started with the day. It might be because you'll be late for work if you don't get up. Maybe because your bladder's full. I mean, there's something that's motivating you to move. So in order to get somebody to move from what they're doing now to doing something different, there generally has to be some kind of motivation and incentive. Financial incentives are the ones that work the best. That is money. Now, I agree with those of you who say money is not the most important thing in the world, but it kind of ranks up there with oxygen for most people. When you're talking about the primary source of income, it's a huge motivator. So they're going through a series of questions they're asking themselves now and the answers they're getting. And the next question they asked was, how do we get the money to those who qualify? How are they going to pay you? In other words, they're going to send you a check once a month. They're going to give you some special deal at the end of the year. What are they going to do? Well, the answer is pretty obvious, and it was it's logical. And I don't usually use logical and Congress in the same sentence, but Congress did something logical. They said the easiest way for our government to put more money in your pocket is take less money out of your pocket. Therefore, the answer became tax deductions. You know, they're taking money out of your pocket with payroll tax deductions, right? So they take less out, more goes in. Well, why would tax deductions be the way to put money in your pocket? Because tax deductions lead to tax refunds. The next question they wrestled with is how much should those refunds be? How much should we give to those home-based business owners? The answer was interesting. They said first, before they quantified it, they said we want to increase their take-home pay by an additional $4,000 to $6,000 a year. Why that amount of money? Because that's about the amount of money it takes to run a typical home-based business. Actually, it's more than enough money. See, they want to make it cash neutral. They said if we can give them enough refund to cover all the costs of running a home-based business, then those people who want to start a home-based business, those entrepreneurs who want to do something to improve their economic life, but don't have any cash flow, they can still do something about it. So that's why they decided $4,000 to $6,000 a year, because that's enough to cover the cost of running your business and then some. So the next question is, do I have to wait until next April then? If these are tax deductions and turn to tax refunds, when do I cash in my tax deductions and receive a refund check? That's generally the end of the year. So do I have to wait? Fortunately, the answer is no. Congress knew that wouldn't work, because you can't, if their objective is to be able to cover all the costs of running your business, you can't cover the cost of running your business for all the rest of this year and up through the middle of April next year and then into the end of April, beginning of May when you get your refund check. If you have negative cash flow or no cash flow, that isn't going to work. You need to have the money when you need the money. So Congress said, we're going to let you collect 1/12 of your additional refund amount every month all year long, and you can start that immediately. So you don't have to wait till the end of the year. You collect it on an ongoing basis. At 12 months in a year, each month you collect 1/12 of your new additional tax refund. So if you're wondering if there are a lot of deductions you have to learn about and how time-consuming and tedious it's going to be, well, I got some good news for you in that. Just 5 home business tax deductions, the big 5, will add that extra $4,000 to $6,000 to your tax refund. Now that's going to add $300 to $500 per month to your take-home pay every month. So what are they? Well, the biggest special deduction, let me go back, let me step back one and say the biggest one we've already covered last week. Now, if you weren't on the call last week where I covered this, write this web address down, hugetaxdeduction.com. It's the one single tax deduction that is bigger than any other tax deduction for home business owners, direct sellers, and network marketers. It allows you to deduct 100% of all of your health expenses for your entire family as a business expense. This is huge because it means that all of your out-of-pocket health expenses, your premiums, co-pays, annual deductibles, expenses for things that are not covered, like pre-existing conditions and things that are outside your plan, like maybe chiropractors or orthodontics, braces for kids. All these things can be paid for with tax-free money. So it's really important you understand this one, because this one alone, we surveyed 25,000 people who used this approach last year, and those 25,000 people got a refund that averaged $4,997, just a few dollars shy of $5,000 additional refund from this one deduction alone. So if you're not aware of that one, then go back and go to Huge Tax Deduction, watch the recording of last week's call, and you'll understand the biggest deduction. Today we're going to cover the other 5. The other 5 deductions include business use of your home, business use of your own personal vehicles, a way to hire your kids in your home-based business for huge tax deductions, business travel, and business entertainment. Those are the 5 topics we're going to cover on this webcast. I'm going to give you a quick introduction to those other 5 of the top 6, but remember, this is a quick introduction. It's not the in-depth version, but I want you to have enough information to know how many of these would apply to you, how many you could qualify for. Let's look at business use of your home first. This used to be called the home office deduction, and it had a lot of problems associated with it. But if you've got a tax pro who said, don't bother claim that because it'll increase your audit chances, or it'll cause you problems if you're audited. If you got one of those tax pros, then let me tell you this. Their information is at least 7 years old. Because 7 years ago, Congress discovered all of the hoops that the IRS was making taxpayers jump through in order to claim this deduction, and it was making it miserable on taxpayers, so Congress changed the laws. Now, this deduction is easy to qualify for. If you simply have an area of your home that you use on a regular and exclusive basis for administration of your business, you qualify for home office. Administration means things like being on informational calls like this, or communicating with your team members, your downline, your customers, your clients. Any administrative type activity. If you do that primarily from home, do most of your administrative activities from home, you qualify for home office. You don't need a separate room for home office. It can be a portion of a room. It can be portions of several rooms. We're looking for the business use percentage, because the more of the home you can use for business, the better the tax break. So what's the business use percentage of your home? Let's say you have a 1,000 square foot home. You use 200 square feet for business. That's a 20% VUP. Now, using that example of 20%, and by the way, that's just an example. It's not. It might be 10% in your case. It may be 31%. It is whatever it is. Once you have that number, 20%. Now, 20% then of your rent becomes tax deductible. 20% of all repairs and maintenance. 20% of all your utilities, your insurance, all the expenses for your home become 20% tax deductible as business expenses. It also establishes your home as a principal place of business. This is really important in the event that you're ever audited. Now, I talk about audits a lot, not because they happen a lot, but because if they do happen, I want you to be ready for them. So you will literally be audit proof if you follow along with me and understand the things that I'm sharing with you. Because an audit proof doesn't mean you won't be audited. It means if you're audited, you won't need to worry about it. It's kind of like if you're driving under the speed limit and you pass the police with a radar gun, you don't have to worry about the results because you know what the results are going to be, right? So that's the home office deduction. It's a huge deduction. It can allow people to deduct thousands of dollars of expenses you're currently paying for anyway with after-tax dollars, but begin paying those expenses in tax-free dollars. The next category is business use of your vehicles. This one is big. This is one of the two biggest. This one tends to come in right behind the deduction where you get to write off all of your health expenses. It's one of the two biggest deductions. Now, if you drive, here's an example. If you drive just 5 miles a day for a year, that's 1,000 miles, right, in tax deductions. Every 2 business miles equals a little over $1 in tax deductions. So that means you're going to have somewhere around $2,000 in tax deductions, just if you drive just 5 miles a day. 2,000 miles in tax deductions for most people will produce a $500 tax refund. So the minimum refund you're looking at for driving your vehicle only 5 miles a day for a year is $500. Now most people are going to drive their car more than 5 miles a day. So it also has the easiest record-keeping requirements. Now they do require you to record when you're in your vehicle using it for business purposes. That you write down the date, your destination, the primary purpose of your travel, and how many miles you're going. So what day is it? Where am I going? Why am I going there? How far am I driving? You can keep track of that just for business use all year long, or there's a new option now, and that is you can fill out that line item in your log every time you start your ignition, and then you only have to keep your record for 90 days. The IRS says if you will keep deductions, meticulous deductions of all the use of your vehicle for 90 days, that's about 1/4 of the year, they will let you take all those totals and multiply them by 4, and they'll accept that as your driving totals for the year, with no other record keeping required for the rest of the year. So sometimes you can even convert commuting into tax deductible mileage, assuming that you've filed the home office deduction, because that's what establishes your home as a principal place of business. Hiring your kids, this is one of my favorite deductions because most people don't have any clue about this one, and it's huge in so many ways. The courts have ruled that you can hire kids as young as 6 years old to work in your home-based business. The money you pay them is tax deductible to you because wages for a business owner are deductible, right? So you're hiring them on a part-time basis, so they're employees, part-time employees. So the wages are deductible. The income to the child is tax-free to the child. This year, a child can earn up to $6,100 per year per child tax-free. That's more than $500. That's bigger than you could pay your child literally up to $500 a month all year long, and it'd be tax-free money. Now, you may or may not want to do that, but one thing that you might want to consider is this. The courts have also ruled that even after your child has earned the money from you, you still control it. You still control how it's being used. Because a child, a minor, a 6-year-old, for example, or even a 16-year-old, can't have their own bank account because you've got to be of legal age in order to have a money market account, a savings account, a bank account, anything like that. So you open a custodial account, or you're the custodian. So they earn the money, you write them a check, you put the check in their account for them, but they can't get it back out unless you withdraw it until they turn 18. It's also a good deduction because when you hire children, your own children, there are no payroll requirements. You don't need to withhold anything for payroll. Social Security, Medicare, all those kind of things that you have to withhold from most family members or most adults that you would hire don't apply to a minor child. And even when they turn 18, from 18 till 26, I think it is now, you need to withhold Social Security and Medicare, but that's all. Not unemployment, not all those other taxes. So it's really easy to do. And it helps the child get, I've got an hour-long seminar that I do on the topic of all the advantages of it. One of them, it gets your child involved in your business. A lot of us started a home-based business because we want to spend more time with our families. But does it really work out that way? We might be home, but we're holed up in the home office with the door closed on conference calls and doing work, and the kids and the spouse are shut out. But if you hire your children in your home-based business, then there are things that you're doing together as a family. But here's one of the real big advantages of this one. Working for you as your employee, your child is going to learn something that is a powerful learning lesson, and that is that the child says to himself, I'm an employee, and I earn so many dollars per hour, so many dollars per day, however you set it up to pay them. But the only way there are two ways I can get more money. One of them is to I could ask for a raise, but that's not earning an increase. The only two ways I really can get more money, and that's somewhat under my control, is I could do more work. So I can say, Mom, Dad, I'm doing 10 hours a week now worth of work. I'd like to make more money. Can I work 15 hours a week? And only if they say yes do I get more money, but I only get more money because I'm working more for it. The only other way to make more money is to do a job that's perceived to be more valuable. If you hire a 6-year-old to put stamps on your envelopes for your mass mailings, then you're only going to pay a minimum wage. But that 6-year-old becomes 16 years old and they start managing your website, you can pay them more money. So the value is higher of the work they're doing. So they're saying to themselves, I only have two ways of increasing my income, and both of them require my boss's approval. In this case, my boss is my parent. Meanwhile, I'm watching Mom and Dad. They can make as much money as they want to from their home-based business. Nobody tells them how much they can make. If they want to make more money, they can work smarter, they can work harder, they can hire other people. There are lots of things they can do, but nobody tells them how much they can earn. They can make as much as they want. So they begin to see the difference between being self-employed and being employed by someone else. And that difference is huge. It's positive and it's huge. So I love this tax deduction. Business travel. We all know that traveling on business is tax deductible, right? So all the expenses from when you walk out your front door until you walk back in again are going to be deductible if you're going on a business trip. Now let's make it more complicated. What happens when you combine business with pleasure? Let's say you leave a day or two early or stay a couple of days late to visit family or friends or to sightsee or whatever you want to do, relax when you're on a business trip. So now you've got, it's part business and part pleasure. What do you get to write off? Well, most of the time, if you understand the rules, you can still write off nearly all of your expenses, but you've got another rules. You've got to set your trip up properly in advance. In fact, if you set it up properly in advance, you can almost always plan a vacation in a way that becomes tax deductible as a business trip while doing very little work, spending very little time on your business itself. So it's almost like 100% vacation, maybe like 98% vacation and 2% business, but you're going to be able to write off the vast majority of the expenses as business deductions legitimately. Business entertainment. When you, generally speaking, entertainment is deductible at only 50%. So if you took me to lunch, for example, and you picked up the tab, and let's say it's $30, you've got a $15 deduction because you only deduct 50%. It's been that way since the 1970s, 1976, I believe it was, and it's not likely to change. But there is an exception to the rule, and that is that when you entertain at home, you get to write off 100%. And this applies a lot to home business owners, especially direct sales people. When you have people come into your home for a direct sales meeting or for a showcase or to present your business to them, every penny you spend on wining and dining them, all the food and drink that you spend entertaining them, is all 100% tax deductible if you do it at home. If you met with those same people in a restaurant, it'd be 50% deductible. But you get 100% because it's in your home. So don't miss out on that deduction. Sometimes you have an option of where you want to entertain someone, at home or outside the home. In the home, we'll give you 100% deduction. There's another deduction that most people are unaware of. It's called we call it the Dutch treat rule. Dutch treat, if you don't know the term, it's an old-fashioned term that means it's like a boy and a girl go to the movies, and the boy buys his ticket, the girl buys her ticket. That's called they're going Dutch treat. Well, sometimes when you go out to lunch with someone or out to dinner with someone, you don't. It starts off as just a friendship thing, but then you start talking business, and it winds up being a business meeting. But when it's over with, you don't pick up their tab for whatever. Let's say you don't pick up their tab for some reason. You're going separately, or maybe a group of you are going, and you wind up sitting next to somebody you talk business with. You're not going to pick up their tab, and everybody else picks up. You know, sometimes it gets awkward. So the rule is this: that if you have a legitimate business meeting, but you only pay for your portion yourself, not someone else's, you can still write off 50% of your portion. So if you do that same lunch, let's say you and I have lunch, and it's the tab is $30, and we each pick up our half, which is $15, then you still get to write off half of your 15. So it's half of the money you spend, whether you spend it on yourself and someone else, or just on yourself. Those are the top deductions for home business owners. Business use of your home, using your own cars and trucks for business purposes, hiring your kids to work in your home-based business, business travel, even when it's combined with pleasure, and business entertainment, especially valuable when you do the entertainment in your own home. Now, those 5 deductions alone, those 5 deductions will produce for most people between $4,000 to $6,000 in new tax refunds. New tax refunds. That works out to be between $300 and $500 additional take-home pay every month. Remember, I said that Congress ruled that they set it up so that you can take 1/12 of your extra money every month in advance, each month, month by month. So every month, if your deductions are going to be worth between $4,000 and $6,000 for the year, that means you can reduce the amount of money being taken out of your paycheck for taxes by $300 to $500 a month. And when they don't take that out for taxes, where does it go? Into your take-home pay. You literally can give yourself a pay raise of at least $300 a month, and probably closer to $500 a month, by using these specific deductions. That means these deductions are worth an average of $100 a week, extra cash in your pocket. $400 a month, 4 weeks in a month, $100 a week. Think about this. What would it be like if you woke up every Monday morning, and when you reach over to hit the snooze alarm, because that's your most unfavorite time of the week, your hand falls on a crisp $100 bill. It falls on a piece of paper. You don't know what it is at first, but you pull it over, you blink your eyes, and it's a $100 bill. And there's a yellow Post-it note on that $100 bill, and it says, "This is to pay for all the costs of running your business this week. And by the way, there'll probably be some left over. You can use that for anything you want to. P.S. There'll be another one here next Monday and every Monday for the rest of your working life." That's what it's like. It really is like having an extra $100 bill show up every week. And you have control over that. By simply understanding these top 5 tax deductions and using them, you can be putting extra $100 a week cash in your pocket. So up until now, probably nobody's ever told you about these. About several huge tax incentives that are available just to home-based business owners. And I got to tell you, the IRS has intentionally not told you. Why? Because it forces you to overpay your taxes by $100 a week or $20 a day. Think about $20 a day. Every day you delay learning this information and putting it to use for yourself, it's costing you about $20 a day. And by the way, this applies to you regardless of how big or how small your business is. As long as either you or your spouse are have a W-2 job. Let's say your spouse has a W-2 job and you work from home part-time at a home-based business. And maybe your business produces a small amount of income compared to what your spouse produces. But your $20 a day in tax deductions applies to your family, not just to you. So your tax deductions for home-based business can be larger than the income from the business itself. So those benefits accrue to the entire family. So you can reduce the family's income taxes. If you file a joint return, you can reduce your end of your total amount of taxes your family pays, sometimes by enough to even drop you to a lower tax bracket. So these have huge benefits, even if your business is very part-time. You do need to meet 3 requirements, however, and I'll mention those very quickly. I didn't put a slide in here on this, but I want to mention them. in order to qualify for any of these tax deductions, you've got to do three things. Work your business on a regular and consistent basis. Now, the tax courts have ruled that they ruled in favor of a woman who said in tax court she works her business an average of 45 minutes a day, 4 to 5 days a week. So that's like, what, 3 to 4 hours a week, right? And the tax court approved that. So that shows regular consistent activity. Requirement number 2 is be working with a profit intent. You either need to be making a profit or working towards making a profit. And there's no limit to how many years you can be unprofitable as long as you can continue showing that you're working towards a profit. And number 3 is just keep decent business records. Keep records of your income, your expenses, and your activities. So do those 3 things. Work your business on a regular basis with a profit intent or being profitable and keeping good records, and that's all that's required to qualify for all these tax breaks. Now, knowledge is power, but I like to say lack of knowledge, what is it? Expensive. If the knowledge you lack is about this category, about home business tax deductions, then it's costing you a lot. What you don't know is costing you a lot of money. Ignorance is not bliss. Let's put that into perspective. Let's imagine, here's an example. It's kind of a crazy example, but it serves a purpose. Imagine if you just now learned for the first time that any taxpayer that has kids qualifies for a special $6,000 tax deduction per child. And you got 3 kids at home. Really? That means $18,000 in deductions that you didn't know about? You'd demand the details immediately, wouldn't you? Of course you would. Well, you know what? The home business tax deductions are even bigger than that. Even bigger than that, and you already qualify. You can slash your taxes by $20 a day. If that doesn't seem like very much, the next time you, starting today, every time you walk out the front door, each day, the first time you walk out the front door, toss a $20 bill up off in the breeze and watch it blow away to the neighbor's house. Throw away a $20 bill every single day as long as you can stand it until you realize that's what you're doing with your taxes. You're throwing away an extra $20. You're overpaying your taxes, 20 bucks a day, $100 a week, $400 to $500 a month, thousands, $5,000 to $6,000 a year, just because you don't understand these 5 tax deductions. So knowledge can let you begin taking back what's been unfairly stolen. I think the IRS has been stealing your money by not telling you about these. If you knew just about the 6 special tax deductions, the one that I did last week and the 5 that we just covered or introduced you to today, that alone is enough to change your tax picture substantially, which means change your financial picture. I know people who have saved their homes, who are ready to lose their homes, and the extra $400 or $500 a month lets them keep their house. Here's why I'm doing this webinar. If you'd invest about 45 minutes a day for about 6 days, that's how much it takes in order to learn these tax deductions. So about 45 minutes a day, 45 minutes on each of these 6 deductions, and you can have a solid working knowledge, enough working knowledge to really be able to implement all these deductions, which will put that extra $400 to $500 to $600 a month cash in your pocket. I'm going to show you right now how to start slashing your own taxes by that $100 a week and put that money in your pocket where it belongs. You can begin doing that by this time next week or even sooner. Now, I said 45 minutes a day for about 6 days. You can spend 5 hours in one day and do it all at once if you want to and be saving this money by tomorrow. I'm going to show you what the new tax breaks are. I'll be more specific about what the tax breaks are. I just give you an introduction today. I'm going to show you for each one of them exactly how to qualify. It's not difficult when you understand the rules. And I'm going to show you exactly what the rules are. And I'm going to show you what you have to go through to start collecting that money every day. How do you change the amount of money, reduce the amount of money being withheld from your paycheck for taxes? How do you get that done? And then I'm going to show you how to produce bulletproof records. Remember, number 3, you got to work your business on a regular basis. Number 1, number 2, have a profit intent. Number 3, keep records. That's always the downfall of most people because you're in business to do the business, not to keep records. Well, I can show you how to reduce that down to 3 or 4 minutes a day and even do it on a smartphone if you want. So if you spend just 5 to 6 hours total maximum with this material, that's all it will take to increase your take-home pay by $300 to $500 a month. Now I got to ask, if you let's say for the first month alone, let's say you increase your take-home pay by $500 a month, and it took you 5 hours to learn it. That means you got paid $100 an hour for learning this, and that's just the first month. You're going to keep collecting that $500 every month for the rest of for as long as you have a home-based business. Let me explain that by taking you to I want to take you to a website that is called newtaxspecial.com. In fact, write that down because you're going to need that shortly. And I'm going to take you to that website right now. Here we go. Newtaxspecial.com. Here's what it looks like. The way that I want to give you this information so that you can absorb it very quickly and easily and put it to use so that you can start bringing that cash home is it's a self-learning course, a self-paced learning course called the Basic Essentials course. And here's what's included. You get the book Home Business Tax Savings Made Easy. That's the plain English guide to home business tax deduction. It's the one that was approved by Congress. It's a step-by-step, double-spaced, easy-to-follow guide. Some people have more time to listen than they do to read, so you're also going to get the audio edition of that book. So you can download, it's an MP3 file. You can download and put it on your iPod or whatever. Listen to it on your way to work and back. Listen to it while you're working out. So you get the same information in two different ways: the physical form of a book that has all the references in it, or the audio version of the book. So you're going to get both of those as part of this package. You may have some questions as you go through it. You may say, I understand about hiring your kids, but what about my grandkids? Well, if that's not covered in the book and you've got that question, you simply ask it, because I'm going to give you unlimited access to me for Q&As for 30 days. Why 30 days? Why only 30 days? Well, it's more than enough. If it only takes you 4 or 5 or 6 hours to read the material, that's more than enough time for you to ask your questions. But I want to encourage you to get into it right now, not delay it, not get around to it and get around to it and get around to it. You know, all of us have a lot of round to it's in our pocket because we never get around to it. So I want to encourage you to start using this right away. So that's why I limit it to 30 days. Now, the truth is, if you send me an email in 40 days or 45 days and ask a question, I'm still going to answer it. That's the honest truth. But theoretically, I only give you the Q&As for 30 days. But that's you can ask an unlimited number of questions on an unlimited number of home business tax related topics. And I'm going to keep your information updated for life. You never have to come back and buy another copy of Home Business Tax Savings Made Easy, because every time a tax law changes, every time a tax court ruling is issued, or Congress changes something about a tax law, I'm going to send you an email that says, here's what just happened, here's how it affects the home-based business, and I'll tell you that in plain English, and here's what to do about it. So as long as you're on my email list, you're going to have your information updated constantly. And I'm going to give you one other high-value bonus, and that is I've got 5 special reports that are my most popular ones. And I'm going to give you all 5 of those. That's all part of this course. Now there's also, I'm going to skip over the next thing and I'm going to come back to it. But in addition, I want you to have a simple record-keeping system, because this is critical. If you don't have proper records, you could lose all your deductions. So you want to have the right records. Well, I want to give you a 21-day free trial, a 3-week free trial of something called TaxBot. It's a smartphone and laptop app. You can do all your record keeping by your smartphone, but you can also input data on your keyboard, whichever is more convenient for you, or a combination of those two. You never have to worry about losing deductions if you lose your computer. And literally in 3 or 4, not more than 5 minutes a day, you can keep bulletproof tax deductions. There's no contract. I give it to you for 21 days for free. And after 21 days, if you decide you like it, then you get a 50% discount. It's normally $19.95. You'll get it for $9.95. Now, there's on this web page, when you go to New Tax Special, you're going to see, as you're looking at right here under bonus number 1, look all the way to the right, bottom line. Click here for more information. It describes TaxBot more completely. You can cancel this anytime. You can. This also is optional. When you go to the checkout page, when you click to buy this product, it's going to be there as one of the free options. If you don't want it, you just uncheck it. The second free bonus I want to give you is the trial membership in my Tax Saving Secrets Club. There are a lot of tax breaks for home business owners. I'm teaching you the top 6, but there are lots more also. The best way for people to learn the rest of them, I believe, is to spoon feed you, give you one bite at a time. So every week for the next 26 weeks, that's a half a year, 6 months, I'm going to send you an email with a link to click on to watch a short PowerPoint presentation, somewhat like this one, but much shorter, that will tell you about an additional tax saving secret for home business owners, one that's not covered in the book. It's not one of the top 6. Again, that's a 21-day free trial. And then it's $6.75 a week, which we bill on a monthly basis at $27 a month, only for 6 months. No contract, cancel anytime. And again, there's a click here for more info. Now, I want you to look at this guarantee on the screen. This is a guarantee. You've never seen a guarantee like this, I guarantee you, before. If my information and my expertise cannot save you at least $3,500 on your income taxes, That's 20 times your investment. You can return the product or whatever's left of it in any condition at any time up to a full year and receive a full 100% discount, or refund, I mean. There's no small print, no tricks, no gimmicks, no nothing. It does not have to be in a resellable condition. In fact, I want it to be dog-eared. I want your book to be dog-eared. I want you to send it back saying, I tried real hard, but it just didn't produce $3,500 in new tax refund for me. Well, that's the guarantee. That's up to a year. And the truth is, I don't even look to see if your year is up. If you send it to me a year and a half from now, I'll still give you a full refund. So you can't beat a guarantee like that. Here's what your investment is today. This is $594 worth of material that I've just shown you. I normally give a 50% discount on the website. For those who are attending today's webinar, I'm giving you another $120 discount. That brings your total investment down to only $177. Now that is a little less than 2 weeks worth of your tax savings. 2 weeks from now, you will have more than broken even. And from there on, every single dollar of additional money in your take-home pay is yours to keep. If 177 is a little tight, you can even do 2 payments of $94. 94 today, 94 in 30 days. So we make it real easy. That's less than a week's worth of tax savings for each of the next 2 months. So you give me 1 week's worth, you keep the other 3. Then give me 1 week's worth, you keep the other 3. After that, you keep all 4 weeks worth. Now that's the offer date. Now here's what I want to do. I like, those of you who know me know that I like doing decision maker bonuses. I like giving a big bonus for people who already know that they want this. Some of you have already gone to the website, New Tax Special, and already ordered this, I know. A lot of you already know you're going to do it. It just makes sense, right? Who wouldn't spend $177 to start producing $400 to $500 per month in additional cash flow? And 177 is a one-time expense. Who wouldn't do that? Award you a special gift. And here it is. I'm putting it up on the screen, right in the center of the screen here. The decision maker bonus is this. We will review your last 3 years' tax returns to see if you left any money on the table. If you did, help you get it back. What that means is we're going to review those returns to see are there any home business tax deductions, including these top 6 that we're talking about, but others as well, that you could have qualified for, but you didn't claim. You have up to 3 years, a taxpayer has up to 3 years to file an amended return to their tax return. So if you find deductions that you could have claimed last year or the year before or year before that you didn't claim, then all you've got to do is file an amended return and you'll get a second refund on tax returns you've already filed. Now, note, this is a special decision maker bonus. It's available to anyone who has already placed your order, or if you place it within 20 minutes of when we end this webcast, and we're about to end the webcast. So if you place the next 20 minutes, then you get this special bonus. This bonus, I know people who have had their last 3 years tax returns filed and have gotten more than a $10,000 refund, more than $10,000 in additional refund. So this is a significant free bonus. Now, I do not give the decision maker bonus to try to encourage somebody to make a quick decision. If you've already made your decision, this is for you. If you're not sure yet, take your time and think it over. Go to New Tax Special and review the page again, and look at the offer and see whether it's right for you. But don't make a snap decision. I want to come back to this slide. So I'm going to leave you on this slide. NewTaxSpecial.com. That's where you can get everything you need and nothing you don't need. It's the basic essentials course. It's nothing you don't need, but everything you need to start slashing your own taxes. The book, by the way, and the downloadable book cover the deduction number 1, which I covered last week on a webinar, and these 5. I covered all 6. So you really need that information if you're going to slash your taxes. And if you don't get this information from me, get it from someone, because without it, you're going to be overpaying your taxes by somewhere a ballpark of $5,000 or more every year. $400 to $500 a month in overpaid taxes just because you don't have this information. So get it from someone. If not from me, get it from someone. So thank you very much for joining me. This is the last 5 of the top 6. Again, the URL for the recording of the first one is huge tax deduction, not deduction, not with an S on it, deduction, hugetaxdeduction.com. You'll find the recording. But go now to newtaxspecial.com and take advantage of today's offer. You're not likely to see it for $177 for much longer. It's good until midnight tomorrow night. thanks so much for joining me. God bless you. And I do this webinar because I like for people to pay only as much money as they're required by law to pay. Every penny you're required, but not a penny more. Thank you for joining me, and have a great day.